You're listening to the Practical Wealth Show with Curtis May, putting you in the driver's seat to control your finances. Let's start the Practical Wealth Talk about alternatives to Wall Street.
Hey, everybody. Welcome to another episode of the Practical Wealth Show. And so today we have a very special guest, Mr. Jason Rodriguez, the owner of Prominent Insurance Agency. Did I say it right, Jason?
Yes, sir, you definitely.
All right. And so what we're going to talk about today is, and I've got some questions around this, and I wanted to bring this up. So today's going to be about protection. I think I've titled this show, Protecting Your Stuff. And Jason, he actually teaches the infinite banking, with us. So we're partners in that endeavor, but he has his own property and casualty agency. The property and casualty insurance is auto, homeowners, commercial, liability, workman's comp. What else? What am I missing?
You're covering all aspects.
And so what you want to be able to do is you got to protect your stuff, right? And so insurance is fundamental to good financial planning, because what happens is I always tell people, look, you're going to either live too long, you're going to die too soon, you're going to get sick and live. But you could also, insurance is there to indemnify you, right? To make you whole. So if you have a fire, if you have a car accident, you need to be made whole. And so Jason specializes in that. And so what we're going to do is we're going to have a discussion and kind of bring out a lot of things to understand this. So one of the things, if you don't understand this, one of the things that you want to look at is you want to get your declaration page. And so from your homeowners, from your auto, from your renters, and begin to look at those things. We're going to go over a lot of what that stuff means. So Jason, let's start with some mistakes you see people making when they're shopping for, let's say, car or homeowners.
Okay. First, I would like to thank you for allowing me to be on your program.
Oh, you're welcome. Thanks for being on.
Yes, sir. But just like as we understand, uncovering, helping people find, things that they may be losing unknowingly, unnecessarily. Same situation in property and casualty. Majority of people I've come across, high 90% is underinsured.
Underinsured. Mm-hmm.
Underinsured. They don't have the proper adequate insurances. So an event that something was to happen, and then a lot of times I was explaining to an individual, when you get a quote or you speak to somebody, the other person on the other line, 99% of the time is just an order taker. Mm-hmm. And you telling them, hey, I need this, this, and this, and that's all they're going to give you is what you require. They're not going to do any risk analysis, ask questions about, dive in deep to see whether or not if you require state minimum or the highest level of personal lines insurance coverage, Mm-hmm. So there's multiple levels to insurances. So majority of the individuals, they say, hey, this is what I currently have, match this. And they don't get into, your assets and liabilities and things of that nature, because basically, in a nutshell, I'm building a wall so somebody can't get between you and your personal assets. So if you're a millionaire and you got state minimum, then you got so many holes in your wall. Like your wall is not tall enough. They can jump right over that.
Yeah.
To you.
That's a good analogy. So let's say, for example, we're in Pennsylvania to record this, and states are similar. So the minimum for liability coverage, let's talk about auto first, is what? In
15,000 per person, 30,000 per accident, and 5,000 for property coverage.
Okay.
So just that alone, if you bump into a Mercedes Benz, you
right.
You don't have enough coverage.
That's right. That's my bumper right there. You owe me money, right?
Like, what are you going to do with that?
But it's cheap, right? But it's cheap. So let's talk about that. So 1530. What does that mean?
15,000 per person, meaning that in the event of an accident and you injure somebody and you hit me and my family, and if I got more than one, it's over for you in the car. So you bump into me and you have state minimum coverages, which is 15,000. It's just me in the car. So the most I can get, no matter how detriment my injuries may be, I can only get 15,000 out of your policy.
Mm-hmm.
So
in the event of health, Hospitalization.
Yes.
Right.
Hospitalization, injury, health,
That's a one emergency room visit.
Yeah, that's it.
Yeah.
So I mean, if you have no assets attached to yourself, you're a student, things of that nature, it's not too much they can do but tack on a judgment for your future earnings. But they can go that far if you don't have adequate.
So you can get a judgment or a claim against future earnings if you're underinsured, if you're in an accident where you're at fault.
Of course, if you murder, if you have an accident where there's a homicide involved, or you kill somebody, you can't put a price on life. So how are they going to mitigate against that loss when you have state minimum?
Right.
So they can, hey, that's not enough adequate coverage, and they can go after you personally. And then they look at your situation. Maybe he has no assets. Hey, we got to do something. The family may want to pursue it further.
Right.
Say, hey, we want to put a judgment on him. Then, if he ever desires, he may never. We never know his financial situation may change.
Right.
And in that event, then you still have that on you, and then any judgment, it hinders a lot. Credit got to be paid before you even do business. Even in our industry,
right?
You can't even get appointed with companies if you got these big judgments. So it stops you from doing a lot.
Right? Exactly. So 15 per person, 30,000 per. So if there's 3 people in a car, you got 30,000 to cover all their injuries.
Exactly.
And then the insurance company's out.
That's it.
And then you're liable for the balance.
Yes, or the agent.
So,
yeah.
Whoa, back up.
Or the agent.
Because
he hasn't, as we understand, and we're taught, he hasn't asked the proper question to be able to mitigate the risk. And the perfect example of that is the Hulk Hogan's. Hulk Hogan's son in an accident killed his friend, and it's a big case. So what happened that he had adequate insurance, but he didn't have an umbrella policy. So an umbrella policy, as we know, goes over your existing coverages in the event that you have an accident and exhausts your current limits.
Right.
You have an extra. So he didn't have an umbrella policy. When you're an affluent individual like Hulk Hogan, you need adequate insurance, umbrellas and excess liability, things of that nature. So, but this was what happened when his son did kill his passenger in an accident. They went after, Hogan, of course, exhausted those limits. And what did Hogan do? Went after the agent, say, hey, you know who I am. How you didn't offer this to me? So what happened? But what did the agent do? In 3-4 different occasions, he sent them the umbrella quote and had his wife sign off on it. Like, hey, I offered this to you.
Right.
Multiple different times. And you didn't pursue it. And you actually signed off and said you don't need it. Now, in an event that this happened, now the agent excludes himself because he took proper precautions.
Right.
If he didn't have that paperwork that his wife signed off on it like a month earlier, then he would be liable for that claim.
Right. So I don't want to go down that road because people don't need enough reason to somebody did something wrong, you screwed up, and you feel somebody's got to pay, you got to sue somebody. So don't even get me started with that. Yeah. So you messed up. Okay, it's your fault. It ain't. So
they always try to throw somebody else under the bus.
Right. Throw somebody else in the bus. So you screwed up because you were trying to. Listen, I would tell people, look, it's your money, right? And so you want to get good advisors, but guess what? Damn it, you can read and write. So you need to. That's why I'm doing this show, so you understand. So you won't ever be able to say that you didn't know. So let's stay on the liability. So liability, so there's 2 parts of car insurance. There's comp and collision, and then there's liability. So we're talking about liability. So I want to finish that. We'll go back to comp and collision, and I want to go back to the umbrella. So you got the $1530 for bodily injury, and then you've got property damage.
Yes.
And so you don't have enough property damage, same thing. So let's pull this out. So if you don't have enough property damage and you've got real estate and you've got investments and money in the bank, what could happen?
Of course, they could come after you for subrogation, because what happens in that situation, the person in the other vehicle, his policy responds for underinsured motorists. So in each policy, you got UIM and underinsured and uninsured motorists in your own policy. So if you're an affluent individual, you probably got $250,000 worth of coverage there covering your private vehicle, because majority of people is riding around uninsured or underinsured. So, with proper advisors, they tell you that as well. So in the event that the person that strikes you got $5,000 and they hit your Mercedes Benz, of course they can't, your bumper's $5,000. So if it's more than that, then your policy responds, and then your insurance company goes after that individual.
Okay.
Same way.
That other person's company.
Yes.
And then
exactly.
So now let's talk about it. So how much, if you're working, you're doing well, you've got kids, how much, before you even get into an umbrella plan, how much should you have?
Depending on your situation, the most you can get is up to $250,000, but the minimum coverage for that particular profile you described is $100,000 per person, $300,000 per accident. There's a minimum.
Right. 100,000 property damage.
Yeah. And you only can get umbrellas with that type of limit. You can't get an umbrella policy unless you have those starting limits.
Right. And it's not that much different, folks,
no.
because you have to play defense, folks. Stuff happens. And what's that old saying? You rather have it and not need it than to need it and not have it. And so if you're building wealth, you have to play defense. Insurance, for the traders out there, is a put. Right. A put is just you are willing to. So with that in mind, so that's defense. That's liability. Right. So now talk about comp and collision. What does that cover? So liability means if you're at fault, this protects you. Exactly. And then comp and collision.
And if I may, stay on that liability for a minute, and just dealing with business owners.
Yes. Go ahead.
Liability. I explained to all my business owners. I said, in a general liability policy, if you're in business, whether it's a home-based business or a retail business, a consulting business, it's imperative that you get a general liability policy for this one reason alone.
Okay.
In all general liability policies, you have a clause in there, duty to defend. So you can use your general liability policy for all types of risk, and you have a lawyer on retainer for what it may cost you $1,000 a year.
Mm-hmm.
You in all general liability policies is a clause, a duty to defend. So if any claim comes against you for any reason, you can call up your insurance policy and they have to investigate it. A lawyer has to investigate it and protect you as one of their own. And if you needed to do that yourself, a good lawyer is $200 to $400 an hour.
Right.
You understand what I'm saying? So you exhaust that $1,000 in one visit.
Right.
So it's that alone. And people don't understand. And even going back to liability itself in your homeowner product.
Yeah. Go ahead.
Liability protects you all around the continental U.S. for things that you do not deliberately. Now, if I do something to you is not deliberate, you can it has the same effect on your homeowners. You got liability in that. In fact, about it, Cosby used his homeowners insurance policies for those claims of sexual harassment with all of them females.
Mm-hmm.
He didn't pay out of pocket. Yeah, he uses homeowners insurance.
I like that. Okay.
See, people don't, but when you have advisors like that, they tell you the things that you're able to do. But everybody has this ability. You may do something negligent to me, Curtis.
Right.
You use your homeowner policy as to defend that. You understand?
Or people, even things like somebody sues you for slander because you said something.
Exactly.
Or somebody's, if you've got a pool, that's why rates are higher, and somebody gets injured at a splash party at your pool. Something happens to somebody else's child.
Exactly.
Or if you have cookout, you're serving alcohol and they leave impaired and you're the last place they left, and they're in a car accident a couple of miles down the road. That could come back to you.
Exactly.
And your liability coverage will protect you in the event of that.
That's right.
Wow. See, so folks, you got to play. See, everybody's working on, we talk about creating wealth on this show, folks, but you have to play defense. Let's go in there because so let's talk about explain comp and collision, and then I want to break down things like loss of use, and then I want to talk about the business owners. So Let's talk about comp and collision on the car insurance.
Okay. So comp and collision is basically they would consider that full coverage insurance,
mm-hmm.
whereas comprehensive is just a quick overview. Is anytime your car is not moving, parked, and it's stationary, things of that nature, and you have an accident, tree falls on it, fire happens, somebody breaks into it, somebody scratches your vehicle. Anytime your car is not moving is a comprehensive claim. When your car is in motion for any reason, then it becomes a collision claim. So you're driving over, potholes, you drive and you hit somebody hits you, you bump into anytime your car is moving, it's collision. Every time your car is stationary, it's comprehensive.
Okay. And so there's two parts. There's comp and collision, and then there's liability.
Yes.
Right? There is, as you might as well just tease this whole thing out. So there is full tort, limited tort.
Yes.
Tell them about that.
And full tort and limited tort, that's just for the state of Pennsylvania. And it's a complicated, it's just, they separate, if you got limited tort, they separate the other things that you can get in bodily injury, loss of wages, things of that nature. You can't go after that. But that's, but it's definitely a benefit to always get full tort. Mm-hmm. But, in certain situations, depending on your profile, it may be too expensive to get full tort. So they opt out for limited tort, which with limited tort, there's limited benefits that you'll receive from choosing that coverage.
If you needed to sue somebody.
Correct.
Right.
Yes. In event that, yep.
In event you need to sue somebody because they hit you or something like that, and you're injured and that kind of stuff. So attorneys hate it when you have limited tort. Okay. Yeah. And let's talk about homeowners.
Yes.
Because that's a major thing in terms of the protection that affords you, more so than I had a fire or something like that, or I had a loss. What's covered on it? So when they see like a deck page,
on a homeowner policy, it is because if you're an investor,
declaration page.
If you're in a declaration, depending on what you have, you got two different types of policies. You got a homeowner policy, and then you got a dwelling fire policy. Mm-hmm. Homeowner policies basically cover, give you the most extensive endorsements and coverages when it comes to protecting.
And that's a HO3.
HO3, correct.
Right. Okay.
And threes is levels. So you got and everything. You got HO1, 2s, and 3s. 3s is the highest special. So what that means, basically, they give you the everything is included in your home. Only thing that's not included is the things that we list as excluded. If it's not listed, then it's covered.
Okay.
So that's the highest form you can get in HO3. So it comes with all the bells and whistles.
And so you can have things like, so you usually have a deductible, which means that how much you're willing to pay.
Exactly.
In event something happens, 500 or 1,000.
Yes.
And then what happens is you have things like loss of use.
Yes.
The liability coverage. I want you to talk to them about replacement costs versus actual cash value, which is a biggie.
Yes. And
so let's go into that a little bit.
Okay. And basically when you get a homeowners, it's based majority of the, depending if you got a mortgage and things of that nature, they want all properties, if you're the primary residence, to be on replacement cost value.
They meaning the bank.
The bank.
Because it's the bank's asset.
Correct.
Right. Okay.
Correct. So they want to protect their asset.
Right. Their asset. Right.
Yeah. They can't afford.
Same thing with a car. They want to protect their assets.
Yeah. They can't afford
a car. You will have 100, 300. Right.
Exactly. So they can't afford the ACVs. They want replacement. But where it gets tricky, a lot of companies don't give you replacement costs on your assets, which is your contents.
Mm-hmm.
So
right.
You get ACV there, and then you can get replacement costs there. In addition to replacement costs, actual cash value is what it costs minus the depreciation. So you bought a laptop. I got this new Lenovo Flex 5 laptop, maybe $1,000. A few years from now, that same product, man, that you get a laptop this 3 years, next year, for half the price.
Next year, right? Yeah. Exactly.
So that's how ACV is calculated. What is it worth today? It's not worth $1,000 when you bought it. the actual cash value of that particular product is $500.
Right. So you had a loss next year. The question is, well, do you want a year-old computer or do you want a new computer to indemnify, bring you whole today?
Exactly.
So you need another $1,000 computer. So what would it cost to get you a new one? That's what you mean by
replacement cost. Exactly.
Right. Same thing with your house. You know, if you're you know, you say, well, my house is worth $120,000 and I got $120,000 replacement cost. So you have to look at that stuff because, okay, could you, if you had a loss, a fire, if they paid you $120,000, could you in your neighborhood get into another house? Exactly. Probably not. Okay.
Probably
that
not.
might be enough for a down payment, you know, but you're not whole. You're not indemnified. And so you have to, would you say, Jason, when you're shopping this stuff, you need, those are the questions that you should ask are what? What questions should they be asking?
You know, first,
other than price.
Yeah, that's the first question all consumers ask.
Right.
You know, because that's all they know, you know, and unfortunately it's driven like that through these companies. What you see, Geico, call me and I can get you this in 5 minutes, save you 15% in 5 minutes. Allstate, I save you this, Progressive, I save you this, I save you this. So they promote price, but want us to sell value, you know?
Right.
So they put that in the minds of the consumers. So when the consumers, unless you, you know, I learned doing in this, you know, being in this business for quite some time that the people that are really concerned about adequate insurance and having a proper protection in place are the successful and the affluent.
Right.
You know, people that really have some assets and they really don't, you know, they don't mind it being a little bit higher for a company that's reputable and a company that has, you know, it's no different than a life insurance company. You know, they want a company that's reputable and a company that's going to be able to pay claims when a claim arises.
That is the key.
So, you know, they don't mind paying a premium.
And not going to nickel and dime you with little loopholes if you have a claim.
Exactly. Because that's what it is. You know, a lot of times what I've learned is that you know, you pick these rinky-dink companies because they saving you $50 to $60, but in the event of a claim, you can't even get $1 out of them. They don't want to cover. They don't want to cover the. They don't want to cover the claim.
So you got to look at your whole picture, your whole kingdom. Right.
Yes, sir.
And so you got to play defense, which is what insurance allows you to do. You got to protect the kingdom.
Yeah.
And your stuff, your house, your car, your this, your, you know, and we're in a litigious society. So your first line of defense is your insurance policy. Wealthy people love insurance. But let's say you're not wealthy. Guess what? You don't have any margin for error either. You know, you have a lesser margin for error. So you still need to protect yourself and ask questions.
And the wealthy uses the insurance for their benefit, meaning that like another thing, Harvey Weinstein, not to just bring up these sexual predators, you know, whatever, but there's a lawsuit between him and Chubb right now because he's trying to use Chubb to pay his attorney, fees and costs for, you know, these allegations and things of that nature. You know, so
that's interesting. So I mean, you know, they're all, you know, apparently not nice people, but the thing is they have, advice, and they set up protections to protect themselves. And so that's what we've got to learn how to do, and especially as business owners. So talk about the home base and beyond that, you know, brick and mortar, internet businesses, whatever, how you start talking about general liability. And so let's go deeper in what that covers and then some variations of that and what people need to be, you know, looking for to protect themselves.
Yeah. And even in the business, you know, nowadays, like I say, like you mentioned earlier, one of the biggest things general liability will cover is slander. You know, a lot of us today, we advertise through social media. I may say something about your product that is not accurate and they can try to sue me for that, you know, and we do a lot of that today. You know, we critical, you know, you could be critical or you could just be analyzing somebody's product and have 99 things you said right. But that one thing you misstated, they can bring you, they can sue you for it.
That's right.
You know, so we got to be.
And if it's wrong, you still have to defend it.
You still have
it could be complete BS because it only takes $40 to file a lawsuit. And, it's you have to. And so your insurance is your first line defense. Their attorneys go to work for you. That's
exactly
major.
So like you made a perfect example. If they say something and I just want to sue you for, just know if I sue you, it's going to put you out of business because you ain't got no insurance.
Right.
You can't respond. You understand what I'm saying?
Yeah.
So it's like, hey, you want to put this guy out of business? Just sue him. Huh? Spend this. How much did you say it was?
Right.
To put a lawsuit in? You said
$40 or $50 is nothing.
Wow.
Right. That's why you have all these BS, cases. But I was just telling one of my clients today, I said, he was asking something. I said, listen, you need to protect yourself because, in the attorney world, my wife's an attorney, the first person that has to reach for their wallet loses, right? So they may you could sue them. He's got some wrongdoing thing, which I think he has a good case, but you need to be able to litigate that because if they don't want to do it, they'll litigate you and they have bigger pockets. Right. Yes, but if somebody comes at you because you hug somebody wrong or whatever, you can file all kinds of suit, and you got to play defense, and your first line of defense is your protection. What other kind of insurance should business owners be looking at? Because you specialize in commercial.
Correct.
Which is hard. Not hard, harder. I mean, it's not, you could, a regular agent, which they're great, but to sit there and basically take orders. But, when you doing a risk assessment, because I know you work with a lot of small business or you work with a lot of real estate investors, people with, companies, talk about that, what you take them through in assessing their risk.
Okay. Yeah, we have a risk profile that we take them through. We ask them some questions, send them a risk profile, go over that. But the foundation to any policy is general liability. That's just, that's you lay your bricks, you lay your cement. That's your foundation. And on top of that, you have cyber liability. That's it's a growing trend especially with all of these cyber crimes happening. Anytime you take people personal information and you have a database and you keep it, and then you got to couple it with name, date of birth, social security number, and a credit card, some vital information, which we do take as
right. I know you're
professionals.
We get done the call, you're going to do a quote for me.
So
it doesn't scare me. All right. Yeah.
So cyber liability, and as you know, it got big after the first Target breach.
Yeah.
Then the Experian breach. These are cyber crimes, and everything is in. All new business nowadays, brick and mortar is being eroded.
Right.
All of these big chain stores, even if you got a retail store, your first thing is to set up an online store before you even get a brick. You're not even thinking about brick and mortar, these new millennials and Generation X's. So, there's so much interaction and so many transactions that's happening online, and everything I do is online. We having this conversation online.
Right.
Everything is, this is the new economy. So cyber.
What's your social, by the way? No, just kidding.
So I don't want to get you in trouble, man.
Right.
You already gave it. You don't have that insurance. So hold on for that. Okay.
I have identity theft program too. We might put that in the show notes because identity theft is a big thing. But but we've got there's so many things. I mean, that's why I see as business owners, you take the risk, having the heart to go start a business, to put up money, and you've got staff. I've had somebody had a funeral home, and their person driving one of their cars I don't think it hit somebody, but they hit something. And of course, they're always going to trace back to the biggest pocket. So you really have to, have somebody analyze your situation and really, as a commercial broker, look for holes in the castle, in the castle walls that you got to protect yourself against. And that's basically what you do for people.
Exactly. Same thing like you do in finance. You plug the financial holes. I plug the holes in coverages. So it's no different.
And I'm a PNC license. I just refer my stuff to Jason. So
thank you.
And because you want an expert that, especially with commercial stuff, is that this is what they do. This is their primary thing, because there's a lot of gaps there that you got to think about. So it's not what you do all the time. You're going to miss stuff.
Yes.
And it only takes one time to pierce your kingdom, and that's a problem. Exactly. And so you want to be able to look at that. What am I missing? What didn't we talk about as we come to a close? So we talked about car. We talked about homeowners. So we could talk special article riders. So you got jewelry and
exactly
Rolex. You need to add to it because it's not covered. It's only covered up to what, $2,500 or something like that, depending on the company.
Yeah, depending on the company, depending on the the form that they place it on, things, and it all deals with carriers as well, So yeah, I would basically just have proper, adequate protection, and insurance, when used properly, is used to benefit the end just you.
Yeah,
making sure that you're in a proper position. A lot of us spend money and say, "Hey, why do I need this?" I'm not. There is always a need for it because you can use it, but you just don't know how to use it. You have a tool, but you don't know how to use it because you wasn't taught the proper way to use your insurance in the event of a claim. That's what insurance is there for. We scared to use it. We like, nah, I don't want my premium to go up. Depending on the situation, if you can self-insure, if there's something you can pay out of pocket, you don't use your insurance. But if something you can't pay out of pocket, you call your insurance company.
Yes, you're paying for it. If it's under $500, then you pay for it. If you got $1,000 deductible, then you pay for it. But it's over than that, then that's what you pay your premium for.
Exactly.
And how long have you been? I forgot to ask you this up front. So how long have you been? You should start with this. Not somehow we got right into talk, but how long have you been doing this? Go ahead.
Yeah, I've been doing it since 2011.
Okay, so
7 years in.
7 years, and he's got his own agency, so he represents different carriers. So he's basically a broker, so it's not tied to a particular company. So he's freed up to find you the best plan for you.
Yes, and we we do understand, and we do know price is important, but we never compromise on coverages, for pricing purposes.
Right. I've heard say price is only a consideration in the absence of value. So
yes,
you can get a cheap suit, but if it don't fit, what good is it, right? You want a good suit that fits. Yeah. So Jason, as we wind down, tell them if you're in the so what we want to do is educate people. We've got people across the country, but if you're in where are you? PA, New Jersey, Maryland?
Yes, the states that we currently do business in is Delaware, Pennsylvania, Maryland, New Jersey, New York, and Virginia.
Okay. Yeah. And so if you're in those states and you're hearing this and you want a coverage review,
yes,
to make sure that you have you're not underinsured. Do you have a replacement cost versus actual cash value? Do you have liability? Could you benefit? A lot of you are doing pretty well, and you need to see if you could benefit from an umbrella policy. They're like $200 or $300 a year, and so I would definitely reach out to Jason. Jason, give them your best way to contact you.
The best way to contact is call the office at area code 302-351-3368, or you can email me at jason@prominentagency.com, or visit us online at prominentagency.com. That's prominentagency.com.
Okay, so we're going to put that in the show notes, and folks, if you got a question, reach out. And again, if or you can email me and I'll forward it. And if any of you have you want to go deeper, like in something that we mentioned, I'm happy to get Jason back on again. So Curtis, you didn't really cover the liability deep enough, and I would like to, if I probably got enough information, you could do a whole show on car, a whole show on home, and I'll tell you a quick story. I mean, so I had somebody that they had a fire. They didn't lose the house, but it took them 3 months to get their house back up to snuff. So they paid for them to live in Embassy Suites, which is a nice, apartment complex here in Philly. And their loss of use part of their homeowners policy paid to keep put them up in a nice place, while the other their insurance, paid for the repair to get their house up to snuff. And see, so folks, that if you had to come out of pocket for that, you would be done. And so that's what insurance is for.
Yes.
And so if you're building wealth, that's offense, but you have to play defense. Defense is cash flow management. Defense is life insurance. Defense is disability insurance. Defense is protecting the castle, your stuff. Okay. And so Jason from Provident Insurance will help you protect your stuff. Jason, thank you so much for being with us.
Thank you for having me, sir. Appreciate it.
My pleasure. So hopefully y'all took some notes and reach out to Jay. I call him J-Rod. No, just kidding. Don't call him that. And you got A-Rod, I got J-Rod. And but thanks again for listening to another episode of the Practical Wealth Show. And folks, we will see you next week.
Thanks for listening to Practical Wealth. To access the show notes and resources, go to practicalwealthshow.com. To get your questions on the show, go to practicalwealthshow.com. This show is for entertainment purposes only. Before you make any investment decisions, consult a professional. This show is copyrighted by Practical Wealth. Written permission must be granted before syndication or rebroadcasting.